Hey everyone, and welcome back to the channel where we demystify the complex world of finance, one stock at a time. Today, we're diving deep into a fascinating situation that's popped up on our hard-to-borrow screener, Smart Logistics Global Limited, trading under the ticker SLGB. This isn't just a generic hard-to-borrow discussion, we're going to break down SLGB specifically, using its real numbers and unique profile to illustrate exactly what's at play. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show SLGB logo/chart Smart Logistics Global Limited, or SLGB, operates in the industrial sector, specifically within integrated freight and logistics. This company, with a market cap of around $36.09 million, provides business-to-business contract logistics solutions in China. Think industrial raw materials, line haul and only transportation services, coupled with valuable additions like truck parking, freight storage, and truck examination. Now let's talk about some recent action. Chip price chart. SLGB has seen some notable movement, up 9.33% today, and an impressive 49.36% over the last 5 days. Looking back further, it's up 2.63% over the last 30 days. This recent volatility is interesting, especially when we consider its relatively small estimated float of just 3.0 million shares. Our internal composite squeeze score for SLGB currently sits at a moderate 41.2 out of 100. What is cost to borrow and why it matters? So, why is SLGB on our radar? It all comes down to something called the cost to borrow, or CTB. Imagine you want to bet against a stock, meaning you believe its price will fall. To do that, you need to borrow shares from someone who owns them, sell them, and then buy them back later at a lower price to return to the lender. The fee you pay for borrowing those shares is the cost to borrow. This fee is typically expressed as an annualized percentage, and it's paid daily. A high CTB indicates strong demand from short sellers to borrow the stock, combined with a limited supply of shares available to lend. When these fees start to skyrocket, it's a major signal that a stock is becoming hard to borrow. This matters because these costs eat into short sellers' profits, making their bet increasingly expensive to maintain. Why this stock is hard to borrow right now? For SLGB, the cost to borrow is absolutely eye-watering right now, sitting at an annualized 10.04.9%. Highlight CTB number, let this sink in, over 1,000% per year just to hold a short position. While we don't have current data on the exact number of shares available to borrow, CTB fee this high, especially for stock with an estimated float of only 3.0 million shares, tells us that the supply of shares willing to be lent out is extremely tight, and the demand from short sellers is significant. Short sellers are willing to pay a premium because they have conviction the stock will fall, but this conviction comes at a steep price. SLGB's low relative volume today, at just 0.1x its 30-day average volume of 7,382,293 shares, could also suggest that liquidity might be constrained, potentially amplifying price movements on lower volume. Squeeze mechanics explain. This brings us to the concept of a short squeeze. A short squeeze happens when a stock's price starts to rise unexpectedly, forcing short sellers who borrowed shares to buy them back quickly to limit their losses and avoid paying exorbitant CTB fees. This rush to buy back shares creates even more buying pressure, which in turn drives the price even higher, trapping more short sellers in a vicious cycle. With SLGB's 10.04.9% CTB and its tiny 3.0 million share float, any significant upward price movement, especially on increasing volume, could potentially put immense pressure on short sellers. However, it's crucial to understand that a high CTB does not guarantee a squeeze. It could also mean that short sellers have incredibly strong conviction in their bearish thesis and are willing to pay a premium to stay short, believing the stock will eventually fall significantly. The recent 49.36% increase over the last 5 days for SLGB could be catching the attention of those short sellers. Dilution risk check. One major factor that can completely negate a short squeeze thesis, even with high CTB, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide liquidity for short sellers to cover their positions without driving up the price, and it also puts downward pressure on the stock price per share. We've checked for any recent dilutive SEC filings like S-1s, S-3s, or 424 BS for SLGB in the last 90 days, and we found no such filings. This is a positive sign for any potential squeeze scenario. Additionally, we found no recent reverse split for SLGB in our look-back window, which can sometimes be a red flag for companies in distress. Remember, this is complex stuff, and understanding the risks is paramount. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should we be watching for with SLGB? Keep an eye on that cost to borrow fee. Will it continue to climb, or will it start to ease? We'd also want to see if the availability of shares to borrow changes. A significant increase in trading volume, especially above its 30-day average of 7,382,293 shares, paired with continued upward price movement, would be key indicators that short sellers might be feeling the heat. Given SLGB's business in integrated freight and logistics in China, any company-specific news or broader sector trends could also influence the sentiment. Our 41.2 squeeze score suggests it's a situation to monitor, not necessarily an imminent eruption. SLGB Smart Logistics Global Limited presents a classic hard to borrow profile with an astonishing 10.04.9% annualized cost to borrow and a tiny 3.0 million share float. While the conditions for a short squeeze might be technically present, it's vital to remember that these situations are highly volatile and carry significant risk. Always do your own thorough due diligence, understand the company, and never invest more than you can afford to lose. If you found this breakdown valuable, please hit that like button, subscribe for more in-depth analyses, and let us know in the comments what other hard-to-borrow stocks you'd like us to cover next. Thanks for watching, and we'll see you in the next video.